Hello and welcome, Slots investors. Today, we have something truly special for you. We will meet Warren Buffett, often referred to as the Oracle of Omaha. He is not just an investor, he is a living legend. And as a cherry on top, we will be playing his first ever recorded interview from way back in 1962. So if you are new here, don't forget to hit that subscribe button. Warren Buffett, the chairman and CEO of Berkshire Hathaway, is undoubtedly one of the most successful investors of all time. With a net worth of over $100 billion, he's a living testament to the power of patient, value-oriented investing. Born in Omaha, Nebraska in 1930, Buffett bought his first stock at the age of 11 and filed his first tax return at age 13. He would go on to become one of the richest and most successful investors in history. He learned the ropes of investment under the mentorship of Benjamin Graham, the father of value investing. Over the years, Buffett's investment philosophy evolved, influenced mostly by Philip Fisher and Charlie Munger, focusing on buying high-quality companies at reasonable prices and holding them for long term. His investment philosophy can be summed up in a few simple but powerful principles: value investing, long term thinking, and a commitment to continuous learning. His legendary patience and discipline have allowed him to weather economic storms and achieve incredible long term returns. Buffett's wisdom isn't just about money, it's about life. His quotes and speeches inspired millions around the world. Buffett is also a dedicated philanthropist. He has pledged to give away more than 99% of his wealth to charitable causes through the Giving Pledge. Known for his frugal lifestyle, Buffett is still living in the same house he bought back in 1958 for $31,500. Now let's turn back the clock and listen to the words of a younger Warren Buffett. This interview from more than 60 years ago provides a fascinating glimpse into his early thoughts on investing.
The president's action on steel probably had something to do with the timing of the decline, but I don't think it was the factor which determined the amount of the decline. For some time, stocks have been rising at rather rapid rates. Corporate earnings have not been rising. Dividends have not been increasing, and it's not to be unexpected that perhaps a correction of some of those unusual factors on the upside might occur on the downside.
Some observers from time to time say that the stock market is a forecaster of events to come. Can you predict, or would you care to take a look at what you think this might be forecasting, the decline?
The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher or thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
Well, in a nutshell, Mr. Buffett, can you give us your opinion of just exactly what happened, what caused it?
Well, there was undoubtedly some forced selling the week when the stock market hit the news. The previous week, prices had declined about 6% for the week on average. And there was some stock that was forced upon the market both by margin calls from brokers and some that was forced out by improperly secured bank loans. And this in turn set up a self-generating mechanism on the downside for a while, which we may have seen the last of and which we may not have seen the last of.
It's amazing how his philosophy on investing has not changed all these years. No wonder he has become the investment legend he is today. The key point to grasp is this last part,
which we may have seen the last of and which we may not have seen the last of.
Stocks go up for no reason and they go down for no reason. People think stocks are predictor of corporate earnings, but they are just other people's opinion. And other people's can be wrong, and they usually are. No one, and I mean no one, can reliably and consistently predict what the market will do, especially in the short term. The only thing we can do is look at the businesses and estimate cash flows individually. And that is what we do in this channel. I hope you found this video insightful. Remember, investing is a marathon, not a sprint. So let's continue to learn, invest wisely, and grow our wealth slowly but surely. If you enjoyed this video, please give it a thumbs up and share it with your fellow investors. And if you haven't already, hit that subscribe button and the notification bell so you won't miss our future videos. Until next time, stay patient and invested.